Hey everyone, welcome to our first buyer workshop of the new year. As you know, I'm Nina Gervasi, and on the screen I have Patrick Roman with EE Mortgage Capital. And Patrick and I work together with tons of buyers and sellers. We partner together for so many different types of events and different things for clients, and we really have a great system going for helping the buyers and the sellers in different ways. So obviously, when you are buying a home and also selling, which that's the workshop in 2 weeks, people. You're here for the buyer workshop today. Um, there's going to be some unique questions. So we have our first time home buyers, maybe with a little bit limited down payment, maybe a little bit limited of an income, different things like that, some student loans to consider. Then you have your step up buyers, the ones who have a home, they're ready for the next size home, and they have to figure out how to navigate that. They may also still be in a wonderful, very low interest loan from back in the COVID days,
Right.
but they're still ready to move up and they want to figure out how to do that. And then we also have those buyers who are perhaps, I'm going to use air quotes on downsizing because none of my empty nesters or people ready for that next home actually truly downsized.
Right.
They didn't even right size. Sometimes they just change neighborhoods to a 55 plus or, all one level. So we have buyers in all different, you know, arenas of their life, like different times and different things. So, Patrick, if we were talking to a first time home buyer, one of the things that trips them up a lot is what do they need to have ready to get approved? Because you and I both agree getting fully approved before you start looking is the best way to go. Because if you are fully approved, then you are going to be able to be more competitive and perhaps close in 2 weeks. So, talk
Yes.
to us about what they need this first time home buyer for you to get approved.
Yeah, it's a great point. I think the with first time home buyers, the most I think overwhelming thing is like who to contact first.
Mhm.
I contact a realtor first. So I talk to my local credit union, a bank, a mortgage lender. And that's where really having someone that work as a team like us, like a professional that we have the same process going forward, but for them it's who do we contact first. So
Right.
having our system in place that we know works and then educating the first time home buyer on that. But the first thing, yeah, getting completely underwritten pre-approved is vastly different than a pre-qual, right?
Hmm.
Pre-qual is what you're going to get 90% of the time with credit unions, retail lenders, or banks. And that's really a loan officer's best guess of the
So they're not even
situation.
pulling anything to do that. Is that
They
correct?
may no, they may do a soft pull. They're going to ask for some income docs, and then it's going to be a very generic range of numbers, which doesn't give confidence to the buyer, right? So what we do is go through the complete underwriting process, which isn't a big deal on the back end. It takes one day, and then we have it back. But getting them completely pre-approved and underwritten allows me to get very detailed with the numbers for the borrowers and the clients. Much easier to make a decision when we're talking real numbers,
Right.
not generic pie in the sky stuff.
Yeah,
So,
because the next question they always ask you is, what will my payments be? And you're
correct.
like, well, we can't do that until we have some of this, information as well. And then you can give them more. But like bank statements, pay stubs,
Yeah, it's
what should
just
they
really
gather?
it's it seems overwhelming, but once we actually go through the process, no one likes to do homework, right? So I try to make it where I approach it where the technology is great that we use. The portal is completely secure. It's
Okay. So
very
they're
easy
logging
to
in.
they're logging in, they're uploading their documents, driver's license, pay stubs, W-2s. They don't even have to do bank statements. It auto pulls from their bank and imports it.
Okay.
So,
So
I
they have to
mean,
give you their bank, at least their bank
with the
info.
portal, so the portal pulls that information when they log
Okay.
in and it's
Okay.
all secure. So really you're talking, three, four things. And that, if you're self-employed, there's some, tax returns and stuff. We obviously work a ton with business owners. And, but I always like to tell them once they do that little bit of effort up front, then it's all on me and you, right?
Hmm.
So that's where we get into the nuts and bolts of the proposals. We do maximum price points, a very high percentage of the time. What they are approved for from guidelines is not what they're comfortable with paying, right?
Right. Well,
And
that's important.
it's super important because we overcome these objections that borrowers think they have in their mind because they heard it somewhere, they're on Reddit, Instagram, they hear it from a friend.
Right.
And then once they go through that process, we're slowly knocking those off, right? Oh, we
Hmm.
don't need 20% down for a down payment.
Yeah, and
Oh,
a lot of these like young kids, and I'm really excited that I'm working with
mhm.
so many people in their mid late 20s, early 30s that are buying houses. It's encouraging to
It's
hear
exciting.
that they are
Yeah.
moving in that direction and they're able
Mhm.
to pull together some money, but that's just it. We're still talking student loans that they
Mhm.
have on the books. Some of them have car loans, hopefully, nothing extraordinary, you know.
Right.
And then, you know, they're still looking at that debt that they have and now wanting to bring a house into it. And I keep telling them, look, you need to take into consideration everything you have going on in life, not
Right.
just what this house is going to be like. What are you paying in rent now? Is that comfortable? Do you want to stay in that
Mhm.
number? Would you like to be less? Like,
Yeah,
obviously,
and
there's
that's
a
all
lot of
part of the
things.
process we go through because ideally their payment range, their max payment range has to match with the loan parameters they qualify for, what down payment that's coming from. And
Hmm.
then I always tell you, hey, they have the green light, right? So when I tell you
Hmm.
they have the green light, they can write a contract that day or 6 months from now or
Right.
anywhere in between. The whole point is
As
that,
long as they don't make any big purchases or do
yeah,
anything
don't buy a
crazy.
car or boat or anything like that.
Lord, people.
But
I had somebody
so
switch jobs like in the middle
yeah,
of
it
a purchase
happens.
a
And
few
that's
years
why
ago.
like
I'm like, what?
once they're in our world, right? And they move from that, that pre-approval status, it's
Yeah.
from that, then we find them a house. And
Yeah.
like that's really where like the secret sauce and the work starts. Cause once we start identifying properties, that's the strategy. And that's
Yeah.
I think where we both shine is they like a house on 123 Main Street. How long has it been on the market? How's it priced? Are they still living in
What
the house?
strategy can we
What's the
go with?
strategy? Seller concessions, rate buy downs. Are we going to do a 10-day close? Do we need to do like all that stuff? The
Yeah, it
borrower
really comes
knows
in.
that we have all these features and options that we're going to go to bat for them for. And then we go through that process until we're under contract on a house.
Yeah,
So,
I think that's something that first time buyers need to understand is sometimes there's flexibility with being able to negotiate in getting closing costs paid for by the seller
yes.
to help them, let's say, break their lease, that
Mm-hmm.
sort of thing. Money that
Absolutely.
they're gaining doesn't always necessarily mean you should get money off the top of the house, off the list price. Sometimes it's more advantageous to you as a first time buyer to have money in your pocket to do these other
Yes.
things than it
Yes.
does to save yourself. All right, Patrick, so that this listener can understand, let's say the house is a $400,000 house, for example, right? If they knocked off 10,000, what does that really reduce their payments by?
Yeah. It's minimal. It's like Starbucks 3 times a week, really.
Okay. So
So,
so
and that's
nothing, people,
no,
right?
and that's part of the process that I go over once I send a detailed proposal. We jump on a Zoom call and we're going over like some very, there's it can be a little bit overwhelming, but that's like I spend the time. Like that's where we really spend the time because we're
Yeah.
going over a whole bunch of scenarios, all the features, and that conversation would be kind of once they find a home and we're like, hey, when you're talking like $10,000 of say they're coming in with 3% down,
Yeah.
right? And they're like, hey, that's $12,000 and I'm really tight on my cash to close. Well, great. Then we can use that $10,000,
Yeah.
pay for all the closing costs, property taxes, homeowner insurance,
Yeah.
HOA dues, attorney fees. And maybe there's a
All of
little
it.
bit left over that we can buy down the rate. So their cash to close would be in that situation, their down payment minus a deposit. And maybe the
Hmm.
difference in the payment is $15 to $20 a month,
One thing
right?
I want our first time home buyers to understand is that when there is a competitive market,
Mm-hmm.
you don't always have the flexibility to do this type
Okay.
of thing. So
Yep.
we want to look for the houses that have been sitting a little bit longer, perhaps, that are going to be more willing to negotiate, that have some of this. Of course, on my end, I'm always, Patrick, you know that I'm like, I analyze everything. Like I am analyzing that neighborhood. I'm
Mhm.
analyzing where did the other houses list at and then finally sell at. That gives us an idea of,
Mhm.
your buying power as now the first time home buyer in this neighborhood and our negotiating flexibility. So there's just a lot that we can do for those first time home
Oh,
buyers.
so
But
much.
I think it's location dependent, house dependent, market condition dependent, in how much we can
And
bake
that's
into
yeah, and
it.
that's why it's so important to go through the process because it's so much easier for clarity
Yeah.
and you're not paralyzed by all this information. Like once you're at that step, and like I said, the pre-approval doesn't expire. We get pay stubs once a month. It allows me to update the borrower with changes in the market, changes in rates. I
Yep.
mean, rates right now are the lowest they've been in almost 3 years, right?
Mm-hmm.
So it's a lot easier to have those conversations when they're at that stage of pre-approved, right?
Mm-hmm.
Um, Also, when you mentioned about flexibility in house, that's part of the conversation I know we both have is look, your first house, it's not going to check all the boxes, right? It's just not. And you have to have a little bit of some flexibility and an open mind when you're doing your search and looking at homes. I mean, I remember my first house, it was you could barely live in it, and I was just, but I needed to get in the game. Like
Yeah.
I was
Oh,
sick of
for
paying
sure. You're
rent,
building equity, people. I mean, you're
sick
building
of building
something
rent.
here.
I had a friend of mine live with me for 9 months to help with the payment until I, improved a little bit,
Yeah.
and I kept the house for 2 years, and then I
Mm-hmm.
sold it. So it's a mindset where you're not going to love everything. You know that
Yeah.
they can do improvements, build value. We're likely gonna be refinancing that loan, which I take care of that, and we stay in communication. I track all that information, so they're gonna get a
Yeah.
lower payment in 6, 7 months,
That's
right?
important for them to.
Yeah.
So one of the things that my buyers hear me say all the time is the 80-10-10 rule. So I
Mm-hmm.
keep telling them, we walk through a house. I'm like, there is no perfect house. So the
Mm-hmm.
house should be 80% of what you want, need, and love. 80%. Okay. There's going to be 10% you don't love, but you can change. Like, all right, you really wanted a fence or need a fence, you can add it. You don't love the paint colors, people, you can change paint colors. Okay. So don't
Easy.
get hung up on little things. You don't love the backsplash or the counters. These are things that can be changed. There's going to be something you don't love, but there's always, everybody has something they wish that they could change but can't.
Right.
Maybe it's a steep driveway, maybe it's not a flat backyard, or you have neighbors in the back, you really wanted woods in the back, like all these things.
Mm-hmm.
There will always be something, and only the buyer can decide, like, oh, it's 10% I can live with or not live with, kind of
Right.
a thing.
Yeah.
And that, luckily, I don't know, maybe it's because like how I educate my buyers, my YouTube, all the stuff, where they kind of come into their home buying with a more of a realistic approach than a
Yes.
fantasy approach. So, like you never
Well,
know,
think
kind
about
of
it. Think
thing.
about if someone is just, you have the search engines like the Zillows, the Redfins, all those. And if you're not with an experienced full-time realtor, which
Hmm.
we can talk about, and someone that has a great process and team, you may be looking at stuff that is way outside your price point, way outside your affordability.
Yeah. Or
Then
just not matching other criteria
they're
that you
not
need.
matching up, and
Yeah.
then you're going to get burnt out. Like you're going to get burnt out, especially if um you're even at that point where you're not even underwritten and pre-approved, you're pre-qualified and you're working with
Oh,
a
man.
realtor and you're actually going and making offers and nothing's getting accepted because there's no
Oh,
strategy,
wait.
there's no
What's worse,
plan.
though, is
Yeah.
that they didn't work with somebody, let's say, that I trust, you. All right.
Mm-hmm.
And they went through some 1-800 thing online.
Right.
And now they're told they're pre-approved.
Mm-hmm.
Now, here's the part. North Carolina's non-refundable due diligence fee. You have complete
Mm-hmm.
confidence in this lender that I'm not really confident in. I'm confident in Patrick. And if you now have to put down this deposit, guess what? It does not come back if you then find out you're not fully qualified. This is why we go
Super
through the
important.
process,
It's
people.
why our
You don't
process
want to lose this
works.
due diligence
Yeah,
fee, right?
yeah. And
Well,
we and like we've come across, and I do quite a bit of, like, I'll call them rescue loans, where they start somewhere.
yeah,
Unfortunately, like in we our process where we get our approvals back same day or 24 hours
yeah,
max.
yeah,
Appraisals are guaranteed in 10 days or less. So,
yeah,
but that's not what people experience in the outside world, like
yeah.
credit
No, no.
unions, banks.
Banks take forever.
Imagine
Are you
what you
kidding
just
me?
said. Like, someone says, all right, I need $10,000. That's non-refundable. Awesome. Barb's excited. That bank submits their file to underwriting. Maybe
Dude,
best case 2 weeks later,
no way, man.
they're
Like
going to get
this,
information.
it's so painful. It's
Yeah.
ridiculous. All right, so
So then
let's
that
talk about the next
borrower,
buyer though, because the
yeah.
next buyer is I've been in my house for 5 years, whatever, maybe longer, and I need the next size up, right? The
Mhm.
kids are getting bigger, more kids, whatever the case may be, or I'm relocating here from another part of the country. So they're not first time buyers. They've had a little bit of experience under
Mhm.
their belt. Maybe it's been a while since they purchased, but they aren't quite ready for their last home, right? So, what do you recommend? Actually, you know what? We're going to put both of them in the same category because a lot of times they have to sell
Mhm.
and buy, but they don't want the sale of their home because listener who's out there with this whole workshop, I want you to understand something. North Carolina does not have a contingency clause. We don't have a contingency addendum. So, what that means for you is you can let the seller know you have a home to sell. You can let the seller know that if you don't sell that home, you can't move forward. But if you don't sell that home, your due diligence doesn't come back to you. So
Right.
you're still on the hook for losing that if your house doesn't sell. So we really want to be sure that we have a contingency plan in place or something that's not even contingent on that Patrick and I can help you figure out a way to buy this dream home and then sell this one over here, regardless of whether you're relocating here from another state,
Correct.
regardless if you're a move up buyer or you're empty nester ready to move
Mhm.
into your 55 plus forever kind of thing, right?
Yep.
So, what would be the plan on that?
I think first, if it's an existing client of ours, they obviously have experienced our process, the success of it, and how we work. So
Mm-hmm.
a little bit different. If it's someone who maybe has worked with a different bank, I always like to start kind of with like how that experience went, what they liked, what they didn't, because I know right off the bat, what potentially went wrong and why. But the process is the same. There's just a much higher level of strategy and communication with the moving parts, because
Mm-hmm.
ultimately someone who is buying and selling, whether they're relocating or not, they want control on both sides. So
Yeah.
we want to optimize the sale with timing, price, proceeds from the sale. We want to optimize and not put them in
Yes.
pigeonhole them with a time frame that's unrealistic to buy. And then how do we match that up? We have a
Mm-hmm.
ton of features that we can do with bridge loans, recast strategy, which is just a simple way that that person can take the equity from their sale. They're already going to own the new house, and they have complete control and timing on when they want to dump the money onto the new loan. The payment resets to whatever that lower loan amount is. And that is one of the best tools that we have because there's zero rush, right? They can sell the house. Maybe they have moving expenses. Maybe they want to fix up the new house. I stay in contact with them, and then they're like, "Hey, I'm ready. I want to put $200,000 and recast my loan." It's not a refinance. It's just a phone call, and they can do it one time on the life of the loan. And
So they're
that's, but
basically taking a chunk of money from here
yep,
with you and
yep,
they are putting it towards this to recast the loan.
yep. After they already own the house. So we go over, like, just think about it with that initial pre-approval underwritten process. It's more detailed because I'm also helping them with, of course, your advice on crunching the numbers on the sale, right? What are the net proceeds going to be? What does the profit look like? And we want to be mindful of the timing. right? Because I think what that borrower number one is most concerned with is I don't want to have two mortgage payments.
And for how long and all
For
this
how long?
stuff and like all
Right.
of the thoughts. And I
So
mean, some of them have, let's say, they're in their 40s, 50s, they have some extra money saved up than a first-time home buyer. So
sure.
they're not at that really tight spot where they can't afford their closing costs sort of thing. So
Right.
they're a totally different strategy than we're using with somebody
Yes.
else.
Yeah, and remember too, it's you close on a house. Say we close on a house tomorrow, they don't have a payment until March 1st, right?
Hmm.
So with that
Oh,
buyer,
that's important. They always
it
forget
is.
this.
So they
Like,
already have a lead time. They close. First payment's not
yep.
due until
Hmm.
30, 45 days. And then we're working heavily on the, which I know we're going to talk about down the road, but our listing strategy that we have is phenomenal, right?
We're going to
And
make them listen to that
I
episode to
know,
get it. We're holding
right?
back on it.
But there is a very high level listing strategy that we have. So for that person who needs to
Yeah.
sell their house, we have a pretty high success rate of getting that number they want with incentives that we do, which
Hmm.
at the end of the day, that's just part of our service and strategy that we do. Right? It's not like we're just going to find them the buy
Well,
side.
that's just it. I mean, like they don't well, hopefully once they've spoken to us and if they're willing, listen, any of our past clients would be more than willing to, speak with you directly and
Mhm.
refer us in terms of how the process worked. But we literally have their back on both sides, right?
Correct.
Like,
Yep.
so you're giving them all of this education, all of this help on the buy side, and then we're also backing them on the sales side to get
Yes.
that future buyer in the house with a little bit easier of a time to make
Yes.
this whole process more seamless. Like, I mean, it's I love having that whole program
Yeah,
together.
because it's not fragmented, and for the
Mhm.
con for the client, it's I think a sense of reassurance that they
Yeah.
know that we're involved on every side, right?
And when
Every
they
side.
see that, they're always surprised. They're like, "Oh, really? You're going to do all this?" But like,
Right?
yeah, that's like
Yeah.
that's your
And
A team. This is what we do,
right, that's what we
We're not
do.
giving you
No,
Walmart, quality and service.
service. Yeah.
We're at Neiman Marcus here. You're like getting the
Yeah.
full everything.
Full treatment. But and I
So,
mean, I think the thing that's similar to first time home buyers, just different, is the objections that they think are getting in the way. I mean, it's
yeah.
you're we are, we do it often, right? And this is our job. But for someone who's going through that, it's the same process. Like I'm chipping away, right? And the numbers don't lie, and that's why I love it. Like the math is the
They really
math
don't.
doesn't. So I'm like, hey, I understand from the emotion standpoint, right? What's going on in the fears. We can shelf that and we have a strategy for that. But the numbers are what I think when people go through that process and they see the numbers and how it can work and the control that they have, so they don't have to sell their house and then I got to rent somewhere and then I got to move my stuff twice. And
Oh my
then
gosh.
what if I only have, 20 days to find a house? Like you don't want to be in that position as a buyer to be forced by time to make a decision that's not going to be good for you.
I definitely feel like you and I have done a huge bulk of business this past year. And even I know what's coming up.
Mm-hmm.
So 2025, and I know what we have coming into
Yeah,
2026 of I have to buy before I sell. That is a
yeah,
number one thing that I run
it
into
is.
left and right is and I love the people who are like, nah, I got enough cash, I can do whatever. Well, that's fantastic, but that's not normally what we find.
Right. Yeah. And too, like that's just some, especially if they've spoken with their local bank
Oh
or
God. Patrick, I
they
cringe, man. I'm like,
yeah,
what
well,
bank?
especially in a situation like this, like they just like I tell people, there are amazing loan officers at just banks that don't have the capacity and the features to do something high level like this, right?
Yeah.
Like you
Do you remember
really
you and I had one of our buyers who started going through their bank for a
mm-hmm,
HELOC,
mm-hmm,
and it was like 6 weeks later,
yeah,
and they still didn't have the approval. And you were like, I got everything that you need in like 24 or 48 hours later. We got
Yeah.
everything that they needed and
Yeah.
they clearly moved forward with you. I
Yeah.
mean, the whole thing was, I'm like, it's taking you how long
Yeah.
to
It's
get a
shocking.
decision from your bank? Like,
Yeah. And you
we
got to
need to
think of
move
like
on from this.
they're depository banks. So depository banks make their money on deposits. They do mortgages, but out of like a convenience and just they just can't execute like we can.
Yeah. Yeah.
So
It's completely different.
yeah,
And
I had a client who was, and he was private wealth with Wells, okay, which great, you know, and got him pre-approved, went through our process. He was very transparent with me, which I thanked him for. And I was more competitive on rate, more competitive on cost. And I think with that type of client, like, it's availability, right?
hmm hmm
If you text me on Sunday at 6 o'clock in the morning and you're like, I need you to write a
Oh, yeah.
contract, we're going to write a
Guess what?
contract,
They're
right?
not getting that with the bank. Mm-mm.
So it was Saturday morning with this borrower. He's in California. He called me. It was 7:30 in the morning his time, and we had to write a contract.
hmm
I go, call your guy, call Wells Fargo. He's like, what do you mean? He's like, they're not open. I'm like, exactly. I'm like, you're going to lose this house,
Yeah.
right? And he's like, let's do it. I'll go with you. So it's just like, it's just an example of the once it's still competitive. It's always going to be competitive here, right?
Yeah.
Especially if you're gonna find that house, you're gonna want to act quick,
hmm
and you need a team that is responsive
Yeah.
because if not, you're just not going to get the house.
They're really not.
You're just
I mean,
not.
the time, the speed in competitive situations, especially.
And think about it, like if you list a house and you see a pre-qual come over and it's from ABC Bank
Nope.
and it's a 45-day close of escrow, are you really gonna take that seriously?
Here's the
Like, are
other
you gonna
thing.
feel right?
I need to hear all buyer. I want all buyers to hear this right now. Okay. Regardless of whether you are a first time home buyer here, period, but especially if you are moving here from another state, one thing that trips people up is that our closing dates are firm. They're not a suggestion like other states have. Other states move their closings all the freaking time. And I
Yeah,
mean, they can move it out a month, whatever. Like they're constantly
not
debating
here.
stuff, like all the BS that comes along with it. Nope, your closing date is set. And guess what, people? You have 7 days built into that wiggle room in case you run into any problems. And that includes weekends and holidays.
Yep.
So don't go with a lender who has no idea
You need
of
someone
how
local.
these
You
are.
need someone
Period.
hyper
Period. This is
local
why we do this.
to North Carolina
Yeah,
because they
that's it.
understand the inner workings, especially the due
Yeah.
diligence. I mean, it's sad,
Dude.
but
Ugh.
I don't think, I think realtors don't do a very well. We do, but like realtors don't do a good job explaining. And then if you get lending that's outside of the state, they just don't. Working with attorney, we're an
They may
attorney
not even
state.
understand it.
Yeah. So like we're an attorney state, not a title state, an
Right.
escrow state, right?
That's
So
huge.
very, very big difference. And we are fortunate. We have amazing relationships with our attorneys.
Yeah.
And they go to bat for us as well. So that's why I think like first time homebuyers, especially, like they need that comfort and trust that it's not only about just, it's us as a team together, right?
Yeah. Buyers
When
have to get
things
that.
when things work the way they work, to us, it's like this is what we do.
Yeah.
It's just, I just feel bad for first time home buyers who some way or another just get into a tough situation with who the realtor is, who the lender is. And then if those two together aren't the best, they're just not going to have a good experience.
Yeah. And they'll always remember that
And they're
too.
always going to
And then they'll
remember
feel
that.
bad.
Yep.
Yeah.
Yep.
So let me ask you one question that I'm running into. You and I have talked recently about dun, 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 condos. Man, like condos, I understand the appeal for some people, but I am overall in a million ways am not a fan of condos at all.
Yeah.
Because what buyers don't understand is you literally own from the paint inward. You own
That
airspace, people.
airspace.
You
Yeah.
don't own anything but airspace. And that brings up all kinds of complications because you, as the lender, need to understand, well, and in condos, there tend to be a lot of let's say, people who are renting out versus their primary property, right?
Investors, yep.
So it's a lot of investors. And when you have that situation, and even if it was a primary turned investor property, you need to have an understanding of how the ratio there, because
Mhm.
that will impact things.
It does. Yeah. And then just first off, like when we're going through that, we start wide, right?
Hmm.
All property types. And if they're interested in condos, great. And we go through the numbers and whittle down. High percent of the times when we start talking about how high HOA dues are right now, and when they look at the numbers,
I'm
right?
like, dude, why are we talking about 400 HOA?
Right,
Why can't I put
right,
you in a townhouse
right.
where you are under $200?
Mhm.
What are we talking about
So
here?
it's just a natural progression of going through the numbers, right? And once we get granular on the numbers and we start having those more in-depth conversations, we kind of know where it's going to switch to. But yeah, and even from a lending standpoint, I mean, the main thing is our condo department's fantastic. But yeah, they have man, HOAs are tough, and HOAs and condos are very tough. There's a lot of things that are outside of the buyer's control that have significant impact on
Oh,
their financial situation, which is the hard
dude,
part.
like,
Yeah.
anyway, listen, there are other parts of the country where condo living is pretty much a thing. And we
Right.
have it here left and right. Like, we can't
Mhm.
pretend like it's not here. But if you have other options, I want to introduce you as to why I like to look at other options.
Yeah.
You want a condo? We'll go look at condos, but you need to understand
Right.
all of the potential issues that can come up with buying,
Yeah,
a
and that's why I
condo.
think builders are, I think, smart now, where we're seeing more like high density stuff, but it's more townhomes. It's
Dude, you
more,
want to know what's big
yeah.
right now in Raleigh? Like like in the center of Raleigh. You're looking at something and thinking it's a duplex. You're
Mhm.
looking at this piece of property and you're thinking it's duplex or townhouses, and they're actually being sold as condos.
Mm.
And I'm like, dude, you're paying over a million something dollars for air space.
Yeah, you don't own the, you gotta own the dirt, like a
You don't
old
even
friend of
own
mine
the
said.
dirt, people,
Gotta own
on
the
this
dirt.
house. Like, I don't even understand why these builders did that. And they have sold, right? And they sold
Yeah.
over a million. They had elevators in them, like the works. But as soon as you call that a condo versus a townhouse,
Hmm.
your ownership's rights, they
Correct.
change,
Right.
and style, all of it. And then how you move forward with loan, homeowners insurance, the works changes, people.
It does.
So,
It does.
anyway,
Yeah.
well, I'm glad that you were able to join me today. We introduce
Absolutely.
first time homebuyers to the paperwork that they need,
Hmm.
understanding how important it is to get that full approval so that they're not working with fluff numbers. You can give
Real
them
numbers.
real numbers, like the
Hmm.
real deal. We can work out what your full payment will be with your HOA, your homeowners potentially. We can estimate that insurance, like your taxes, everything in one lump sum. They need to understand this.
Yes.
And the fact that, yeah, we do this all the time where you own a house and buy a house and then sell the house. Like, it's completely possible. We do it all the time.
And especially too, like just to touch on that, someone relocating from another state here. I mean, we just hear all the time with whether a lot of it, of course, is job relocation, which, there's some additional steps on my end from that. But I think we just come at the approach from a service standpoint as we just want to make, you know, their experience as best we can because it's stressful, like family and you're moving. You have to sell
Yep.
a house. And like, so we just approach it, I think, like if we were doing it ourselves and we
Well,
just
that's
know if
just
we
it.
can, yeah, yeah,
We
if we
know
can
what it is to
crush
go
it for
through it.
them,
So we're not going to put them through additional stress. We're going to
yeah,
take this off of your plate.
off the plate. Yeah. And that's where, um, at the end of the day, it's like we care about our clients and it has to start there.
Period. Yep.
Yeah. Yeah.
All right, everyone. If
All right.
you want the details about how Patrick and I actually work on the listing side together, you're going to have to tune in to the next episode in 2 weeks, in which we focus on sellers. So the second Wednesday of every month is
Mhm.
always going to be buyers. This fourth Wednesday of every month will always be sellers. So if you are in any one of those categories, or if you know somebody in those categories, send them this video. Make sure they know that Patrick and I are on these things, and we're always here to partner and help you. And
You know what
Patrick,
we could
thank
do
you.
too? Like I can pull, because we had two recent clients that just went through that. So it would be good. We can talk like real numbers and
Yes,
show them exactly
the real deal.
the real
We're not
deal,
just
how the numbers work, how it
we're not pretending
transferred,
here, people. We really do this.
what the timeline was, and then we'll talk about too, because on both those clients, we're after they're in their house, we're doing no cost rate reduction loans for the initial purchase, which we'll talk about all that.
That's that's in 2 weeks.
Yeah, two
All
weeks.
right. Well, thank you everybody for joining
All right.
us, and thank you, Patrick.
Thank you. Have